trend seen in NISA, maybe you may think that Japanese are cautious. But let's look at how the younger generation have attitude towards savings to investment. You can see that more investment through NISA even before the new NISA was introduced in 2024. So this statistic is only for 2022, but you can see for the investment through the NISA accounts by age that majority of it is actually in the 20s to the 40s, meaning, and you can see the increase of the composition of the increase of investment through the NISA account by age. And the same trend is on the account opening if you look at the composition by age. So what do we do with encouraging household investments? So it's about complete revamp of NISA. First of all, we have expanded the amount of tax exempted, both for growth-related investment segments as well as long-term accumulative diversified investment segments. So investors can choose according to their risk profile and so forth. We have also made it permanent, which provides clarity and comfort for retail investors to make long-term decisions. So what are we doing in terms of promoting financial education? The government has actually decided to set up a new organization called the Japan Financial Literacy and Education Corporation, which provides and promotes financial education from April this year and will be in full operation from August. And this is actually a public-private initiative in cooperation with various stakeholders, including the FSA, the BOJ, and industry associations. And here are some of the key initiatives that we are thinking moving ahead. We also think that enhancing customer-oriented business operations will be critical. And we used to have principles, but now we made it as a legal obligation for financial institutions, including distributors and advisors, to conduct their business in a sincere and fair manner while taking into account the best interests of customers. Now, we are also looking to reform the asset ownership because asset owners play a critical role in ensuring that the asset managers have a sophisticated and productive asset management in place. So we are to develop asset owner principles by summer of 2024. We are also looking to reform the occupational pension funds, such as DBs, as well as DCs, because we think, generally speaking, in this field, disclosure information would be much more important moving forward to enlighten the employees or to provide them with sufficient information and to also promote competition. We are also looking to financing growth and diversifying investment opportunities. And here we are looking at promoting startups with growth potentials. The issue for Japan is that our venture capital is quite small yet, so we need to sort of make sure that the venture capital has the right sort of principles in place, for example, in terms of transparency to the investors, governance issues. So we are looking to develop principles for venture capital funds. We also are looking at the last one to hold dialogue on enhancing sustainability investment products by the end of 2023, which has already been kicked off. And we should, the stakeholders are currently discussing what would be the optimal sort of products that would be both in the interest for those who are producing it, as those who will be investing in such products. We also think that these initiatives, some of them can be done quite early, but some of them could take time. So we think that we need to exchange views with other stakeholders to make sure that we are on the right track with the existing initiatives, but also to consider further additional policy measures?
But I've been in Japan for almost 10 years at the same Japanese asset manager. And I truly believe that for us to be an amazing asset management nation, three things need to be happening on the kind of practical side. Firstly, Japanese, in other words, domestic asset managers need to be independent and need to have a global standard. Number two, Japanese asset managers need to actively remove operational and other barriers between domestic and international. And then, having done those two things, domestic players need to be open to a partner with international firms to help bring them in to Japan and maybe ride on their infrastructure. So on the first one, actually, I have like 3 slides. I thought everyone was going to have slides, but apparently I'm the only one. So on the first point, so we have a global presence, and I do believe that we actually have met that global standard that I was talking about. So what have we done? One of the very basic things we've done is we've created an actual real global matrix that works. In other words, functions and regions report into each other, and there is a very strong connectivity. And that removes Japan versus international silos, which really exists quite often at Japanese companies, where you have the international business quite removed from the domestic. And so by doing that, we can learn from all different parts of the firm and constantly upgrade. So in our case, it's led to high global standard. And I think, in fact, we are in some ways more progressive than some of our international counterparts. For example, our Global Executive Committee has 50% foreigners, 25% women, and 1/3 are not even based in Tokyo, which normally is the case that you've got to be at headquarters. Secondly, we have a very strong distribution network. I hope that works. Which is entirely connected, and that you can see that in here. And this is all in-house. So we're very strong in Japan, in Asia, in Europe. But where it makes sense, we complement it with foreign joint ventures, which are entirely plugged in. And so that allows us to expand our footprint considerably from where we are in a highly, highly efficient way by bringing in further international capability. And then finally, we have investment expertise also in-house, and you can see it here. But again, where we need to complement it, we bring in foreign players into Japan to complement it.
Are Japanese retail investors really buying stocks? Don't worry, they're buying stocks. And this is because after the long period of deflation, finally, we are in a positive territory. That means without having risk assets, you will be basically facing risk of erosion of financial assets. So what's really interesting is the statistics survey conducted by the BOJ-related institution showed how Japanese domestic investors are reacting to inflation. So there are 3 choices, okay? So when you select financial assets, what's the priority? Answer number 1 is safety, okay? Answer number 2, profitability. Answer number 3 is liquidity. Always in Japan, from 1977 to year 2020, the first priority was safety, okay? But in 2021, for the first time, the first priority is now profitability, okay? So it replaced safetiness, and this is clearly connected to the inflation versus deflation. So here comes the last number related to the NISA investment. Out of investment in ETFs or mutual funds, qualified NISA-qualified investment trusts or Toshin or ETFs, now we see 20% going into Japanese equities. So that may sound like a little bit too small. It's very true that still Japanese domestic investors like to invest in US equities because by doing so, you will get extra from dollar appreciation. But if this dollar-yen stabilizing around 150 continues, I think that will gradually encourage more Japanese retail investors by using NISA accounts to, I would say, gain more profits from Japanese equity market. So that's pretty much from my side. So thank you very much. Don't worry, they are buying
Thank you,
stocks.
Ikeda-san.
Probably true to say that global and international investors are pretty underweight Japanese equities. Japanese firms have been something of a mystery, I think, to international investors for some time. And hearing some of the reforms today, arguing for greater transparency, better capital allocation, more communication with international investors will go a long way to helping that. Finally, I think, actually looking at the valuation of the Japanese stock market is really interesting. Today, Japan is one of the few markets in the world that has negative real interest rates. And if we look at the equity risk premium that's in the Japanese equity market, it is, probably in the order of 7 to 8%. When we come to other developed markets, in the US, we're probably as low as 1%, and in Europe, we're more like 3%. And that doesn't take into account, the piles of net cash that typically sit on Japanese corporate balance sheets. I think there's $700 billion in the non-financial companies alone. So there is clearly an opportunity if the governance, the transparency, ultimately will need to be driven by good return stories. But if those improve, and as Ikeda-san mentioned, the inflationary outlook has changed, I would see the chances for that equity risk premium narrowing considerably towards its European peers at least would be very high. So I think that makes the market a really interesting one to look at. The energy import bill, I think, went from about 120 billion in 2019 to 250 billion in 2022. It's a lot of yen that is leaving the country in order to buy, dollars. And why I say that's an opportunity is because, developing a renewable power sector, is not just good for carbon emissions and the planet, but also for increasing, Japan's stability economically and not seeing that pressure of yen leaving the country. So I think energy, you could probably put food into that category as well. I think self-sufficiency in food production has declined, probably it's half what it was in the 1960s. And these are all pressures of where money leaves Japan, and they could be addressed to help improve things.